Guys, I'm just getting all the notifications out. Let's see, it's not going to work. Come on. So I'm just getting all the notifications out and then we'll start the class. Is that right? Yeah, that's right. Okay, so we got that one up. Let's go here. Got that one up. Got that one up. Let me find out which one of these is right. Okay, so let me get my chart up. Okay, cancel. Sorry guys, just bear with me 1 second getting this chart up. There we go. So it should have us all up and running. Let me check. There we go. Okay. So here we go. We're up. Put up my screen. Okay.
Oh my god, I just saw Netflix.
Yep.
Yeah, it's crazy, right?
Holy cow. And Disney.
Yep.
Yeah, and I bought calls.
Well, you bought Disney, right?
Huh?
He did.
Yeah, I bought
You got
Disney.
Disney.
Oh
Yeah,
yeah.
I think you have a much better chance of recovering.
Oh yeah. Yeah. And I went out on it, so I'm not too
Oh,
worried
you
about
did?
it. Yeah.
Oh, good.
Yeah, I'm like out like over 2 weeks on it.
In Netflix, I hate it, dude.
I know,
So
right?
bad.
That is crazy. Could you imagine the people that bought those at over $1,000 or even $3,000? I'd be so pissed right now.
Yep.
Um.
Them puts. Anyway, let's.
Oh no, you.
Can't start looking. He's down 90 points.
The stock was at $700.
Yep.
Yeah.
And now down to 60.
And it hit all of them. Like Roku's down, Para's down, Disney's down. Like all across the board is down. Even Fubu's down, or Fubo, how you say it.
Oh, I didn't even think about Roku.
Yeah, like they're all down all the way across.
Disney puts. I think the 127 puts or 128 puts are only $100.
For anybody
They
watching,
go up at 300 at least.
right? For anybody watching on YouTube, what we're talking about here is Netflix today.
Oh.
Let's see.
Oh, hell no.
Let me pull it up. So we was talking about it. Calls were like, even like the far out ones were still like $1,000. And then as soon as 4 o'clock hit, check this out. Holy hell. And you can see like these long wicks, like where it tried to get bought back up, but it was like, nope. Which, you know, in the after hours, it don't take much volume to push it around. But look at the volume after hours compared to right before. That is crazy. Let's see, what are those? If I can look at that. Where's my volume? There it is. Yeah, 200. So what is this right here? Yeah, 90K, and then it goes straight up to like 200K. God. So some things I just want to talk. You know, the last couple of times we've talked about the macro scales, the 4 hours, the 1 hour charts. We've talked about trading tools, and we've talked about charting patterns and candle patterns, and you know, all that's great, but you know, how can you use it, right? So today I just, you know, especially the way, you know, Shimmy and Barraway, we was talking today during the live trading session about entrances and exits, and you know, when to take trades, setups, things like that. And for me, one of my favorite setups is one that I kind of stole from somebody and kind of turned it into my own. And it's using the EMA lines. And pretty much the way it goes, you mostly want to wait for when it's dropped under the 200, the 50 and the 15. Kind of the reverse is what you're waiting for, of what I'm getting ready to say. But it drops under the 200, and then right before it crosses the 200, you get the, in y'all's cases, it would be the 20 over 50 cross, or as some of them in the day trading call it the golden cross. And then the price goes above the 200. Then we see a pullback to either the 15 or the 20 or the 50, and then a bounce. I've got some ones I can show you here what I'm talking about, but it pretty much, sorry about that, sets up like this. You get the cross, it shoots up over the 200, pulls back, and bounces. From there, you know, you can enter right there if you like. You can wait on a candle pattern that you like I was talking about those 3-bar plays or anything like that. But anywhere past that is, you know, up to you. That's what you decide. You know, you can wait for it to break over that swing high right there and then enter, like it did with this candle right here. But that's a good place to enter. From there, I usually pick which one it's following closest. In y'all's case, like I used the 15, but in y'all's case it would be the 20 or the 50. So like in this case, we would see that it's following the 15 more. It's staying above it. It's not dropping below it. So in this case, I would pick the 15 as a get out. So if we got in right here, as soon as it crossed over, and waited until it crossed the 15 to get out, that would be up here. We're looking just on this one play, and it's not including options, just the price movement. Right in there. You're looking at a 2% gain on that. Now, if you compound that, if you're day trading, if you compound that over several times, you can end up getting 5 and 10% gains on whatever money you put in. If you pull this out to, let's say, the 15, and because of this stock I picked, we may have to go the opposite way with it. So yeah, let's do this if we was going to go the opposite. No, here's one. So if we was using this same trick on the 15-minute chart, so it is crossed, it is popped up, come back, touched, and then we wait for it to break over that. So if we was to buy in here and hold it until it crossed back under, let's go with the 15. I hit it wrong. Until it crossed back under the 15. Right there. That's almost a 5% gain just on share price alone. Now, if we're talking options here, that's I don't see a 17. Yeah, $17, $17.50 gain. So it's 17 times whatever your delta is. So that's great. We talked about a setup, we talked about an entrance, we talked about the get out point. So So what if this was to go the opposite way? Where do you get out there? Well, you can either do the same down here, just wait for it to cross the 15, or if it hasn't quite taken off yet, and you're kindly wanting it to bounce between the 15 or the 50, you could use that. You could use that 50, that bottom one, to get out until it takes off and you can see which one it's following more. Or, what I usually do in these, if I was going to get in here, which would probably be the same case with the 50, this little swing low, if I'm to blow this up, right here. So it pops up, it comes down, and we was going to enter here. So my stop loss on this would be if it was to break. If I can get my drawing tool here. This level right here. When it comes down to the swing low right here, where it's popped down and then popped back up, that's where I would cut my losses and get out, because from there I might as well be looking, sorry about this, hang on. From right there I might as well be looking for another setup, waiting for it to set up again. And this is just one of many different types of setups you can use. I know we talked the other day when we was talking about candle patterns, waiting on double bottoms, things like that. So I picked a couple of stocks here that we can look at where I went ahead and rewound the time, and we can see how these are going to start to set up and how we can use other indicators besides the moving averages on how to get in. With this one, we're going to look at candle patterns, charting patterns, and our moving averages, all to tell us when to enter. Now, this is Twitter. This is midday today. We can see that it's about to either double bottom or break below. So if we press play on this, let's just take a look at some of these candles popping up here. Okay, so right here we have a double bottom. We have it popped up, and we have an engulfing candle right here. Now you could enter here, but we haven't confirmed above, well, we will right here. We haven't confirmed above this. And we are, we just broke below or above the VWAP. We're still trading under the 50. All this stuff usually ain't too bad, but we still could come back down and double bottom. I would like to see, we kind of double bottom here, but I'd like to see if we could create, either break above the 50 or create another higher low. So let's just let this play out just a little bit longer and see if it sets up any better for us. Oh, we about had it. Okay, so again, we bounced off this 50. We keep rejecting. We're not breaking over that, so we can't get that confirmation. But again, now we have an engulfing candle here, which has created us a higher high. And if we take a trend line, that's what we're working with. We're bouncing off of this. So from here, we can take the rule of 3, and we can either take the next bounce off of the trend line, or we can see if we can break above this 50, and that would have us above the 50, above the VWAP, and it's about to get that cross that I was talking about. So let's let a few more candles play out. So here we're getting a consolidation, kind of like a flag. Boom. So on this candle, anywhere in here, we've got our bounce, we got our cross, or about to cross. We can enter anywhere in here. Now, if we enter here, our get out point would be if we break this trend right now. So let's say we entered on this candle. Let's see how it plays out. Right there we got our cross. We're coming back, we're touching. Oh, we didn't cross under it yet. Let's give it just a second. Boom. We got to get the close under it. Right there. That's going to close, ain't it? Yeah. So that candle right there, it closed under it. So that would be our get out point. So if we entered anywhere in here, from horizon 3 to here, and got out, as soon as it crossed under, well, we can even go to there. But that's going to give us anywhere from a 30 cent to a 50 cent gain if you're playing options. That would be, if you're just looking for a quick snipe, that would be about 30 minutes. It's not going to be much on this ticker, but you could see if this was setting up on something like the SPY, where that type of move would be probably close to $1, how this play could set up, and you could end up really nice. On this one right here, even if you're doing the, what did we enter at? 47. So even if we did the 48, you're probably looking about 15, 20 bucks maybe, if you're lucky, if you got out at the perfect time. Usually on options too, if I was playing this on options and I seen this double top forming here, I probably would get out, especially with this next candle. But if we're waiting until we hit the 15, we didn't get much on this. It's a little something you got profit, but the main thing I'm looking at here is this setup. So let's take something that can run a little bit better. One that did today. So on that one, let's say we just broke even on it. That trade we broke even on. So on this one, we have the 15 and 50 cross. We're above the 200. We popped up. It's early morning. We popped up. By now we are almost 30 minutes into the day. We've waited our 15 minutes to see if things is going to calm down or get volatile. And we've pulled back to the 15 and bounced. So from here, you can enter right on this bounce. You can wait for a candle pattern. You can wait for it to break above this swing high right here. So let's say we're going to enter if it breaks above this swing high. So let's mark that real quick. And let's let it play out. Well, let the candle. Boom. So we enter in here. Now, so far, this is falling to 15. So let's make that our get out point, the 15. We're above VWAP. It's continuing to climb. Especially on a day like today, when everything's very bullish and everything's going really great. This is a real good play to wait on your 15 or your 20. In y'all's cases, it'd be 20. So we're not looking for a wick to go under. We're looking for a close underneath it, a candle close. Boom, right there. That's our first candle close. So we entered down here. And went to there. That's a 50 cent pop. So you're probably looking at about 30 bucks on this stock. You probably would have got around 3 to 5 contracts. So you're looking at what, 90 to 150 bucks, give or take, you know, whatever. And this is just using that simple trade as get in, get out. 15 crosses. We're all in, all out. Now, like Shimmy was talking today, and Barry was asking a few questions about scaling in and scaling out. What does that mean? Scaling in and scaling out is a process where you're not buying all at once, but you're not selling all at once neither. You're kindly testing the trade out. So in this case, if you was buying, let's just keep it simple, not worry about the options. Let's just talk about the stock. If you're buying in, you can take the risk wherever you want it. So a good rule of thumb is to say you can buy in 20, 20, or sorry, 25, 25, and 50, or you can buy 50, 25, and 25, just depending on your risk level and however you want to enter. If you're a little bit less risky, you might start off with a 25% stake. So if you want to spend $100 on this stock, your first buy-in would be $25. So let's say we seen it pop early in the morning. We want to be a little bit risky, and we're going to buy in on this second candle. So you buy in 25 here. Your get out point would be if it drops back under the 200. Your or your stop loss, sorry, would be if it drops under 200. If not, we're going to let it run and continue up. So your next point to buy in would be if we get a confirmation that's going to continue. In this case, it would. I'm sorry, guys, I'm losing my voice here. If we get a pullback to the 15 and it bounces, then that would be a pretty good confirmation that it's going to continue to be bullish. Again, on this setup, it don't have to be right when it bounces. You can wait for it to break the swing high. So you can buy in another 25 here. The next time, if you want to, you can wait for the next pullback, and if it continues to run, buy in the rest of the full amount, the $50. And you can do this in reverse too if you want to be more risky. You can start off with the $50, buy in 25, and then 25. The whole point is if this went the wrong way, if we had to stop loss and it came down, you're only out that percentage of drop on $25 or $50 instead of the full $100. And then the get out is the same. Most people I know that use this, they don't fully get out when it crosses under like this. They sell little bits as it pops. So if you get a run up, they'll sell 10, 15, 20%. Then when it pulls back, if it was to break this 50, they'll get out. They'll go ahead and take their profit. But if it bounces, then they'll go for the next run. If you get another shoot up, they'll sell another 10, 15, 20% and look for the next pullback. And you continue that each run up until you're either fully sold out or it breaks one of these EMA lines or swing low or whatever you've chosen to be that full get out point. The point is that get out point moves with you. So it's like a trailing stop loss as you're going. It doesn't, if we started down here and now we're trading up here, we don't want to wait for this to come all the way back down here to get out, right? We still want to be in profit and take our profit as it comes. So when we're talking about these setups, if you're playing options, I like to, like on these lower dollar ones here, a good 50-cent run, that's okay. Of course, we'd like to get the $2 runs or whatever, but 50 cents is kind of where I'm aiming at, at least that amount. If we're talking about stocks, then usually I like to go with something like a 1 in 5 ratio. Like I'll risk $1 to get $5 or something along that line. But again, these are things that you have to kind of figure out your own style, what you like how risky of a person are you? Would you rather risk $2.50 to make $5 instead of $1 to make $5? Would you prefer to wait and see if it was to bounce it to 50 and continue on? These are things that you got to kind of plan for yourself. It's your risk level. It's your money you're putting in on it. Are you more of a gambling type person, or you want to be methodical and plan these things out more? But all of this, everything here, should be something that you decide to do before entering that trade. Don't jump in this trade and say, where am I going to get out at? Oh shit. Something like that. It's not, by that point, some of the, especially these low dollar stocks, could have done moved past that point and now you're down. Know this before you go in, that way you're not freaked out if the stock makes a sudden movement one way or the other. So XLA, this is one I thought was neat to show you guys. And I like this setup because it's already ran. This is already midday. We've already had that morning rush. It's already ran. It started consolidating. I heard people say a lot today, it's already ran. What's the next setup? What are we going to do? Are there any plays to be had? This and that. Well, yeah, if you're day trading for sure, because you can always play it both ways, especially with options, back down, or even if you don't have options, for the SPY, you can play SPX, or what is it? XPXL or XPSS. Or if you're talking about NASDAQ, you can play QQQ if you're bullish, or TQQQ, or the SQ, sorry, yeah, SQQQ. So it's already ran, it's consolidating out. Let's see if there's any place that we could possibly enter and make a few dollars on this trade. So we didn't quite pull back to the VWAP. We are starting to form this kind of wave to where we could break out above this pivot point, or possibly pull back and retest this area here. So the way to kind of look at this is it's trading within this area here. So those of you that like to use trend lines and things like that, let's look at it like this. It's trading within this rectangle here. So let's look for a breakout. Sorry, missed that. Somebody's trying to call me. So right here, we had that breakout. We had come down, we had touched, we had bounced. We could have entered at the cross right here. We can enter at the breakout. Either way, depending on which setup you want. Let's let it play out and see what happens.
You know what? I'm gonna let you have my minis.
Oh, sorry guys, that's my fault.
Eat the mini first. Bring the mini first.
We already know what happens now. So that's there. Even if we did wait on that, that's 49.56. So there wouldn't have been much of a play there unless you did happen to, sell whenever you got the short signal or something like that. But we can see how we can start looking for these setups and possible runs, even in the middle of a play, right? You can, excuse me, man, my voice is going. You can look for bounces off of trend lines. You can look for breakouts. You can look for EMA splits and crosses and things like that. The point is to find a setup you like, find an entrance that you like, pick a stop loss, pick a somewhere you'd like to take profit at. I mean, I very rarely ever go into a trade now thinking, oh, I'm just going to let it run and I'll take profits whenever. If I'm seeing something that's really rallying and running, even then I'll say, well, I'll get out if it falls below this or this, whatever the case may be. I can't think of one time within recent memory where I'm just going to wing it. Let's see how it plays out. You know, I've just taught myself in my head to get out at these certain points because you can always re-enter. So now that we know these setups, we're looking at them. Let's try to take a look at a few stocks that could be setting up. And I've not picked out any stocks. We're just going to look at a few, see what's looking good, see if there's any trades that might be setting up. And let's take a look and see if there's something that we should be looking at, something that is worth trying to enter and take a trade, or something that we should let wait and take more time to set up. Because remember, just because you're looking to enter something doesn't mean you have to enter something. Sometimes it's best just to let it wait and set up a little bit more, right? So what I'm going to do is just run through a few of these. And when I'm going through stocks that I'm looking for setups on, I like to look at the 15, the 1 hour, and the 4 hour. Within that range, things are setting up. Things I'm looking for, I might be looking for things that are sold off that could be looking, coming up on a support level. I could be looking for things, like I say a lot, the three stages of a reversal: the sell-off, the consolidation, and the bounce. In that case, like if you're looking at something like this, we had the sell-off, the consolidation, and then the bounce where it pulls up and it crosses here. Those are the type of setups I really like, along with what we talked about where it kind of like S-shapes under the 200, comes back up, and we get that cross, a bounce off the 50 and a pull up. So those are just setups that I've learned over the years that work for me. And I'm hoping that me mentioning a couple of these to you will maybe start opening your eyes to look at some of these. And you may not like the setups I do exactly, and you may tweak it a little bit. You may like the setups that I'm telling you, but you don't like the entry points, so you tweak it a little bit. It's just getting used to finding these trades and what to look for, and we can get into like the meaning of why they're spiking and things like that, knifing, stuff like that. But right now, let's just worry about the setup itself. If we take Sunday, Shadud and them had the Sunday charting, where they charting for the week, where they look at plays and stuff like that. That's where we talked about earnings coming up. They was airlines having earnings coming up, and we kind of said in that class, well, if airlines do good, then we could probably start to expect to see travel stocks doing good, which could lead to things like cruise lines, casinos, and the type of places that book it, like Expedia or Trip. So when we looked at that, we kept our eye on Trip, right? So, sure enough, let's see, this was Friday right here. So between these, sure enough, we had this consolidation. We're watching it, and this morning after, I think the airlines had some news, and one of them had earnings. I can't remember if it was maybe United or something, had earnings on one of these days too. We ended up getting this pop up, and you can see, just like we talked about in the pre-market, we had a pullback to the 200, the bounce. We had the 15 over 50 cross, and it took off. So it's just setups like that. We used possible catalysts to watch a stock and then look for setups that could take off. I'm sorry if you can hear my son. He gets into those games.
Why?
Right here's another one with Ford. This is actually one that I missed, but you can see that I was watching this trend line here. These trend lines here. It ended up breaking out and doing really good today. Bet you if we come down to the 15, yeah, we bounced right off this support. We got the cross, and all we needed was to break out. We got it in the morning. Could have ran it. Tell you what, let me do this. I'm just pulling something up here in the background, looking at some stocks that are running in the after hours. So NRG, nope. IBM. So IBM had earnings. Okay, so this is not a bad one to kind of look at. So, I'm sorry, give me 1 second. Raylan, calm down! That boy. So we had the flag up, and I'm not necessarily looking for this to hold that flag until in the morning and continue on up. Usually with these earning things, and you can learn some of this stuff as time goes on, you get more experience watching them. But usually with earnings, what you'll sometimes see is a pop-up right when earnings is announced. It pulls back, and what we're looking to see is, can it hold its position? Not does it stay up here at the top and continue running, but can it hold support, like in this case the 200. So what would interest me in this type of stock is to look at the pre-market, see if it's held the 50 and the 200, and if it's going to bounce off of that into opening and continue up from there. So knowing it had earnings, we can put this on our watch list for in the morning, IBM, and watch it in the pre-market and see if we get that set up. Now, we can see here that we got that cross. In your case, it'd be the 20 under the 15 cross. And it's pulling back to the 200. So once we get that bounce, we can either look for a candle pattern, we can look for that cross, but we have an idea for a setup. Now, is this one ready to trade right away, right off the bat? No, it's not. But it's setting up. It's something that we can watch for in the morning. IBM. Man, I picked a bad day to be looking for stocks. CLF. Let's check it out. Okay. Yeah. Again, look at this. We've come down. Today we flagged up. We got our cross. We got over the 200. So let's pull back. I want to look one more step back. Yeah. So for me on this one, because realistically, what I'm looking at is for it to possibly return to recent highs, which if we're looking at the candle, would be here to the pivot point, right? So that's $32. It's currently sitting at $31.56. So this is, nothing I would play shares on just to that point, but it's something we could get possibly something out of with options. But it's not fully set up yet. We do have our bounce. The other thing we're looking for is the pullback to the MA line and the bounce. So we have our cross, we have it above 200, but we don't have our pullback. So what I could do is I could put this on my watch list too, CLF, and in the morning I can look. First thing I want to do is look and see if any news has popped up. Has there been anything bad that can say that could possibly let this tank? If not, then I'm looking for that pullback to that 15 or the 50 and the bounce. From there, it's just like we talked about on Twitter, the other ones. After it bounces, we can wait for it to break that swing high. We can jump in right on that bounce. But once again, we look to see if it's falling the 15 or the 50. Sorry, the 20 or the 50. And then the break under one of those. And this is what most of my mornings consist of, guys. The evenings, I'm looking for these setups. I'm looking to see if there's any outstanding news. I'm looking to see what beat earnings. And I make me a list for the pre-market. And then I watch the pre-market to see if I see those setups. And I guarantee, almost guarantee it, every one of my watch lists are going to have one or two good runners because I'm looking at those setups. And it's something that's constantly running pretty decent. I'm going to find, out of every 4 or 5 setups like this, I'm going to find a few, probably 2 or 3 of them that's going to run enough to make some money off of. I'm wanting to find one that's set up just a little bit different if I can. That's not a terrible one. It's already bounced off the 200, but this one is nothing that really strikes me too much until I can see the pre-market. So, no, let's try Tesla. No. Wells Fargo. We do have that cross. We have a flag. We could see if it bounces off this 50 or 200 in the morning, but we would have to worry about this trend line. This one. Okay. Yeah. Okay. Right here we have plug. We can see that it's popped up, it's pulled back. Here's an extreme version of that, and look, I bet you if we put the fib on this.
Plug had news today.
That's what I thought somebody was mentioning. So, yeah, look right here. It come all the way back to the 61% on the fib and bounce. So what I'm seeing right here is that this really could possibly go either way. I'm actually, believe it or not, I'm leaning more toward this could pull back. But if we look at this, we've got right around a triple to multi-top right in here. Sorry, I keep doing that. It's popped up in the pre-market here. It keeps butting up against this and cannot break out. So if I was to bring this, it's trying to mess with me. Bring this all the way out. That is where it keeps butting up against and can't break out. So, since we're in a flag, if we was to say this here, so we're looking for it to either break out to the top or get rejected. Probably, since they're right around each other, we could look at a rejection under VWAP in the 50. So what I could do in this situation is say, well, in the morning in the pre-market, if we get a break above this between the pre-market and the open, I could probably safely assume that it could continue running and going up. But if we get a pullback on this, then it's for sure probably pulling back to the 200, and then from there to the pivot point.
So you're looking at the 15-minute.
Yes, and this one is 15 minute. You could, let's see what the hour looks like. Yeah, see, the hour is okay, but there's just not enough detail there right now. You get a little bit more detail out of this 15 minute. Um, Sorry about that. I keep doing that. And this is how I do a lot of, like, if you see me put out SPY levels and things like that, this is how I do a lot of that. I draw my support and resistance lines. I'm looking for key levels of resistance and support and what would happen if they break them. So I really have no clue in between this of what it can do. Uh, if we're even if we're talking about a stock that this would be a dollar or two run in there, yeah, you could snap it and play it. The bounces back and forth. But from experience and the way we notice these breakouts or breakdowns, um, we could safely assume that if this has been acting as resistance and it's having trouble getting out of it, that once it breaks over it, that the volume should come in, bullishness buyers should come in, and the stock should at least rally a little bit. Um, or if it breaks below this, because we know people have get out points and take profit points and things like that, we could assume that people would start to take profits or get out of their positions if it breaks under this. Probably not a whole lot, but we don't need a whole lot at this point. We just need enough right here for it to pull back to the 200, and then we could see if it's enough to break under that, or if we take our profits there and continue and let it do whatever from there. So if I was going to write this out as like a signal to somebody, I would say above 28, 27, we could go to the next resistance line, whatever that would be. Let's say it's at 30. So above 28.14, we're going to 30. Below, let's say 27.50, we're going to 26.60, and then to 25.23. And when you get those signals like that, like if you used to read my SPY, that doesn't mean that if it breaks this level, just YOLO until it hits this point because zero said it's going there. You know, use your EMA lines, your candle patterns to decide if there's going to be a reversal or not. So we can safely assume that it can go this spot. But if we start seeing patterns of a reversal, we can get out of that trade and take what profits we have and be done with it. You know, it doesn't always have to be all or nothing in those situations. Um, let's see what else. Trip.
So what do you want to do when I'm pickaxing the wall?
AMD. Let's look at it on
Which
that.
one you want?
Yeah, I like AMD. So AMD, this is actually a good one to talk about here. What is that?
Okay, now edit. When I'm trying to wait
I honestly don't know what that is. Oh, I know what it is. Um,
okay.
so we can see that AMD for a while, if we're on the 15, we probably can pull out to the 1 hour. Yeah,
See what I do.
get a little bit more in here. So that setup that I told you that I liked with the 20 crossing the 15 over the 200 and you buy in. This is what happened on this stock in reverse on the bear side. So the 20 crossed under the 50, then we got above the 200, it pulled back, to the 15, or you could wait for the 50, but it pulled back to the 15, and then you ride it down until it crosses under the 50. So if you've already played this and we're looking, we want the reverse to happen to go bullish. So the first thing we need to do is look at where our resistance is at. I need to just get rid of these lines because they're old anyway. Is to look where resistance is at. And that is the 50 EMA line. In however many days here, 2 weeks or so, 3 weeks, it's yet to break over the 50 and hold it. So the first thing we would like to see in order to be looking at this as a play is for it to break over that 50 and hold it. So what does that mean exactly, right? It's easier to say, well, wait for a break over the 50 and you get confirmation. What's confirmation? Well, that's a little difficult because confirmation can mean different things to different people. It could be a candle closing above it, which we've had that here, but it didn't hold. You could wait for something more substantial, like one of my favorite ones is for a pullback to what used to be resistance, which is now support, and a bounce. So in this case, we have been buttoned up against this 50 and cannot break over. So what we need to find is a break above it, which we have here. The break above the 50. But we do not have the pullback to it and confirm. Let me get rid of that. Sorry about that. I keep doing that. I forget that the drawing tool don't turn off each time. So you could kind of say right there, and that might be good enough confirmation for you, anybody that wants to play it, but I like to have a good pullback and a good bounce. So what I could do in this case is to be watching the pre-market and see if I get that pullback bounce, and when it bounces, have the break above that. So pull back just like it did down here, bounce, and a break above. And that's what I would consider a very, very good confirmation. And I would be interested in entering this trade. So let's say it does do that and it wants to enter the trade. So where would my key areas to watch, my stop loss, and my take profit points be at? So let's start with stop loss. Worst case scenario, it falls back under the 50. Where do I stop loss at? Well, this depends on your risk level again. If you don't want to be so risky, you can say, well, if it breaks, if I get a candle close under the 50, I'll cut my losses, be done with it, and I'll wait for the next setup. You could, if you want to be a little bit more riskier and give it more time to play out, you could even wait on this swing low. But let's think about that for a second. This is already under the 200. The 200 is a support that we want to break, or sorry, the 50 is a support that we want to bounce off of and not break back under. So while you could do this, wait on a double bottom and bounce, in my situation, I'd rather get out at the 50, see if it's going to double bottom and bounce, and then re-enter. Again, it all depends on your risk level. So now that I have my stop loss, on this case, I'll get out at the 50. What areas should I be watching? For me, it would be the 200 is obvious, but also probably maybe even this pivot point, which by the time we get up there would probably be really close to the 200. So we would be looking at a resistance here at 90, 99, and at the 200. Now, we could be happy with that. That would be, if it was to bounce and break above, That would be a $3 run. No, sorry, $2 run. So that'd be 2 times your delta, which would be what 50 to 70 bucks, depending on what your delta is. Um, you could do that and be fine with it. And here's what I usually do in these situations: is I'll buy 2 options. I'll buy one that's pretty close to in the money. So if it's at 96, or might as well say 97, I'll purchase a 98. And then where's the 200 at? It's at 101. So I'll purchase a 98 and a 100. And what I'll do is, as soon as we hit the resistance after I'm in the money, any resistance between 99 and the 200, I'll sell the one that's in the money, take my profit on it, not worry about it, and be left with the one that's 100. Now, from the one that's 100, if you got in here and run up, you're probably in profit. So, where do we decide to take profit on this at? And I guess what I'm saying is, how do we play this option here at 100? Ideally, we'd like to see it break over the 200, maybe run another dollar and then take profit, or run another couple of dollars and take profit, whatever it is. But realistically, we have to be even prepared to get rid of that one at the 100 too, because the 98 one, we're getting rid of the 200 regardless if it pulls back or not. If we see any resistance in between the 99 and the 200, we'll get rid of it. But the 98 is for sure getting rid of at that 200. It's already ran at that point $3 or $4. You're in the money. It's going to be good profit. Might as well take it. At that point, there's more risk than there is reward. So our 100 left is the one that we're hoping will break over the 200 and run. But if it doesn't, what you can do is pick a support level like the 99, or you could set a trailing stop loss. You could say if it breaks the next swing low or pivot point. The point is have a get out point to where you're not riding it all the way down, whatever your risk level is. So the hope is it breaks over the 200, runs another couple of dollars. But we also are taking a more realistic approach and saying if it doesn't, then I will cut my loss here, still be in profit, be fine with it. We're not going to worry if it pulls back, bounces, and runs. We're in profit. We're doing good. We're accepting it. But these are just certain little setups that has worked for me over time. They're not all winners. Not every play you pick is going to be a winner. The point is to minimize your loss, or minimize your risk, and we want to always be risking less than what we are making. You never want to risk $1 to make $1, right? Like I was saying earlier, I risk $1 to make $5. And what that does is the law of averages will end up working out. You know, if you take, and also you probably hear me say this a lot, if you are risking $1 to make $5, and you make 5 trades, risking $1 to make $5, you can lose on 4 of those trades. And on the 5th one win, and you're still in profit. I mean, that's crazy to think about, right? You only have to be right 1/5 of the time in order to still be in profit. As long as you plan your trade, you stick to that plan. Don't let hopium get to you and say, well, I'm just going to, it'll bounce here, I know it. And then it hits that point and you're like, oh man, all right. The next swing low, it's going to bounce there, I know it. Oh, damn, it didn't do it. It broke through again. You can't do that. Get out there. Don't worry about it. the good thing about the stock market is it always gives you another chance, right? It'll always give you another chance to lose your money, to make your money, whatever it is. Let's see, what time is it? I guess we've been here about an hour. So let me do this. We'll go ahead and cut this one off at an hour, and we'll talk more about this next week too. I feel like I didn't get in enough, but at the time right now, is there any questions anybody has, or any tickers they'd like for me to look at before we go, or anything like that?
I think I Caterpillar,
Caterpillar, yeah, we can look at that.
CAT.
Let me put it on one of these that I don't. We can do it on that one. Oh, I didn't let it. Yeah, I did. Okay. It's non-repaid on it, so let me. Yeah, there we go. Okay. So not bad. It's above the 200. It's not looking bad. It's broke above the last pivot point. What if we go, how far? Yeah, kind of been trading within this pattern here. We knocked down, come back up. This actually right now is not a bad trade. What I can tell you is some key areas I would be watching out for. And yeah, so pretty much what we've done here. Let me turn the sling off 1 second. Pretty much what we've done. I'll go ahead. What?
This is pretty much the setup that we're looking at, right?
Yes. Pretty much what I'm looking at here is that we've had the rally. It's consolidating off or pulling back. In this case, it consolidated. And now we're sitting on top of that 50. So in this case, it's followed, I would say it's probably been more in line, like if you wanted to, if we squeeze this out back here, if you're looking at this more on a day trading one, the time would have been to get in back here on one of these bounces and let it run. But that's probably, even that's probably a little bit much, because I don't know anybody really, unless they're just hopping in, that would have got in right here. Like I said, unless they're just hoping and hopping in. So the real bet on this one would be wait to pull back to the 50, like you were thinking there. So we pulled back to the 50. Where to from here? Well, a couple areas to watch out on this one. If we do it like this, you can see it better. That's what we want to break over. So we've got our bounce. And probably in the morning, the pre-market is the time to watch for this. Is we're going to see between this 15 and this 50, it bounce. And whether or not we break over this or reject is probably the direction this is going to take. So, and I know that sounds like, well, can it keep consolidating? Yeah, it could keep consolidating out in this pattern, and I can show you what to do in that situation. But if we get a break above this, that's probably a good entry point on it. As long as it does it.
2270. I mean 232.70.
Yeah, yeah. If it breaks above that, that would probably not be. But it needs to do it close to bell or after bell. If it does it in the pre-market, I would kindly wait the first 5 or 10 minutes at least, probably maybe 15 minutes, and make sure it's just not a morning rally and then sell off, right? Because sometimes in the morning things can rally up and it can really knife back either which way. And it's always good to usually wait like 10 or 15 minutes to kind of give the market time to calm down, especially if you're going to play options, because your implied volatility can really get whiplash and shoot up during this time too. So if you get a break above that, that probably wouldn't be a bad entry point. And then again, you could follow your EMA lines as a get out point, or the resistance, one of those like that. But if we get that break, and we're on the 15 minute, if we get that break below VWAP in the 50, your play would be to play it to the 200. So what you could do is we take kind of like that right there. So I'm going off of the red candle because if it hits more across these. So if it breaks below the VWAP in the 50, we're looking for it to go to 228.08 and then to the 200. So that's the way I would play it. I would look for the break above 232.70 or 78 or whatever that is for the bull play, or a break under the VWAP in the 50 for the bear play, and then watch that level there, the 228.08 and then the 200. So that's what I would be looking at for that play.
Okay, thank you.
But what it can do, if you do get that break underneath the VWAP in the 50, what it can do, and this is what I could show you on CLF, it can trade in between these two from there. Like, it don't have to come all the way down to the 200. If you get it down to here and then it breaks under that, yeah, then you're probably going to the 200. But if it starts trading in between these two after that trade, then the next setup you can look for is the breakout of either one of these, either the 232.70 or the 228.80 or 08. So you could kind of potentially have two plays setting up here. Depends on whether it breaks out to the top and continues on, or if you break VWAP, and then what it does at this resistance, whether it breaks or continues to consolidate. Because CLF did this to me. I ended up, what I did is I thought it was coming down. It had already triple topped. I played it off of the top trend line instead of waiting for it to break the EMA, and it came down, but then it just started consolidating in between there for another couple of days. But yeah, that's the way I would look at that one and play that one. But yeah, that's a nice setup, and I'm telling you, the more I mention that those EMA lines to you and that split, you're gonna not be able to unsee that now. Like every stock you look at, you're gonna be like, oh, okay, yeah, I see that. And it is such a simple setup that it actually shocks me that more people don't use it or look at it. And I think the reason is because they expect it to work every time, and it doesn't work every time. But the good thing about it is it's got clear sets of rules to it, to where you get out before you lose much money as long as you follow those rules. So your risk is low as long as you follow the rules, and potential for payout is very high. It just depends on your setup and your get out points. Let me check YouTube and see. Alright, so I'm going to end that there, and maybe next week we can get into more of that. Also, tomorrow after bell, I want to do a little something. It'll be around 4:15, and we're going to talk about where we're at. It's midweek, where we're at, possible setups and plays, and what we can expect the market to do from there. So
Thursday, the Fed's speaking, right?
yeah, I'm pretty sure it's Thursday. I have to double check. Let's see. I got the Fed thing here.
I think we had said it was Thursday.
Yeah, Thursday at 1 p.m. Yeah. And then there's something else. I can't remember. It's not on the Fed calendar, but I think somebody said it was.
I think Real Plays had said that there's a blackout period.
Yeah, but wasn't there something to do about maybe jobs number? No, that was last week, wasn't it?
No, that was, we got that already.
There's something else
Thursdays.
coming out, and I can't think of what it is.
And Tesla?
Yeah, Tesla's Thursday. Yeah, there's that too. And that's going to be really big for the market, especially the SPY, where it's so tech heavy right now. So yeah, those will definitely be really good ones to watch.
But then after Thursday, like Real said, we have a blackout period until May 4th,
Yeah, yeah.
where the Fed's not allowed to speak, so maybe we'll get a break.
Let's hope that they say something really good before they go through that.
Right.
That way, at least we can be on a run for a while. But good thing about this is, the way that we trade here, we can play it going both ways. We can play if it goes up, we can play if it goes down, and it's
Yeah.
so we're set up pretty good. But yeah, I just wanted to mention that tomorrow. Uh, I didn't do it last week where it was more of a shorter week, but I thought this week would be good to start doing the kind of like a midweek, like where we at type of thing.
Okay, sounds good.
All right, well, we'll see you then. I appreciate you.
Thanks so much. Thanks.
All right, baby.